And India is also moving closer to a free trade agreement, this time with Qatar, with terms expected to be finalized in early October. Trade Minister Piyush Goyal could visit Doha on October 6 to conclude this framework, with both countries earlier agreeing to double trade to about $28 billion within 5 years. Qatar has also pledged $10 billion in investments in India across infrastructure, technology, and food security. Alok Saigal is the president and head of Nuvama Private, who's here to talk to us about an emerging wealth corridor in Asia that happens to include the Gulf region, Singapore, and India. Indeed, Alok, thank you so much for joining us today. Before we get into this growing wealth corridor that's been coined and has been noted by many, a lot of this really centers on wealth management in India and how Indians are looking for more ways to manage their wealth. Exactly. Can you help us understand how big the wealth management industry in India is now, and how big it'll be in, say, the next 5 years?
Thank you for having me. So if you look at the last 4 years, the wealth management industry in India has actually grown to $1 trillion. And this was $250 billion 4 years ago. This is also in line with India's GDP growth. If you see, India's GDP has now increased to $4.1 trillion. So there is a true wealth effect that is happening. Obviously, the increased economic activity, affluence, and the overall wealth impact that we are seeing. So we are expecting this wealth management industry particularly to grow by 15 to 20% over the next 5 years. And by conservative estimates, in 5 years' time, this should be a true $1 trillion industry, doubling from here. There are 2-3 reasons why we say that. There is an increased sophistication, increased financialization in India. Earlier, India was a very much two asset class market, which was real estate and gold. Now, if you see, India has become sophisticated, a lot more products, alternative assets, global access, and therefore a need for wealth managers has been emerging, and this trend especially changed post-COVID. So that is where we see the industry heading to.
Alok, help us understand what's driving the demand for wealth management. Is it the sudden emergence or the surge in high net worth individuals in India, as we've seen a lot more wealth built there? Or is this actually coming more from the mass affluent or the middle class? What are the specific growth drivers that's really driving all of this optimism and this growth that we're seeing in this sector?
Sure. So I'll tell you there are 3 to 4 specific factors. One is that there is a very large intergenerational wealth transfer that is happening in India. And that actually is bringing about a lot of, activity in terms of stake sales, IPOs. The next generation is looking to professionally manage their company, make it, a formal sort of enterprise rather than a family-run enterprise. And this is bringing in external investors, private equity, which is leading to a lot of liquidity events. So this is one big source of wealth creation. Second, if you see, India has also been a huge entrepreneurial hub, especially in the startup ecosystem. And that is, again, adding a lot of wealth effect. A lot of now Indian startups have become unicorns. India, in fact, today has closer to 150 plus unicorns. And a lot of the unicorns have now been listed over the last 2-3 years in the public markets. And people have seen large sizes and exits, and global players are investing in that. The other is obviously, as the GDP grows, there is a clear wealth effect that is happening in India. And to very specifically answer your question, India is seeing impact in both specifics. Like, I'll give you one example. There is an Indian company, I'll not name that here, but it got listed on NASDAQ. Now, that listing itself created 80 millionaires in Bangalore, which is the IT hub, because all of them had ESOPs. And I'm not even talking about the founder or the promoter equity there. So these sort of events are increasing the wealth impact. So we are seeing the impact both at the top end of the segment and the mass affluent and HNI segment, the growth that is happening. I think the last part I would like to add is a lot more awareness. Indian markets have become a lot more sophisticated. If you go back as recent as 7-8 years, 10 years ago, you will see a data point that India had only 2 asset classes: real estate, gold, and maybe fixed deposits. Today, the equity market has become very vibrant. Indian markets have a huge market capitalization. You have a lot more opportunities for people. Markets have become sophisticated. There is REITs, InvITs. These were words never heard of in India. There is structured products, alternative assets. All these have actually and offshore access. So that is again something that has come up. One data point that I'd like to share with you: if you look at all the wealth reports in India, which tracks the rich and the quality of the geographical spread of that rich list. So India had around 130 cities where people above $100 million were spread out. Now that number is now closer to uh, you know sorry, I meant to say that we were in 25 cities. Now that 25 cities from 2012 has become 130 cities, and that is something that is also showing the geographical spread of where the wealth dispersion has happened.
So it's not just the rich getting richer here, Alok, because we're also talking about newly affluent entrepreneurs who are looking for better ways to manage their newly developed wealth. What kind of products exactly, or new products, are they actually looking for to manage that wealth? And how does this wealth corridor that we've identified perhaps provide them access to those products or solutions that they're now looking for?
So, see, domestically, people are looking at now from earlier, as I mentioned, from just real estate and gold or simple mutual funds. Now, people have moved to managed equities. People have moved to alternative assets, which are actually giving them underlying ownership of things like commercial real estate, underlying ownership of transmission and road assets. So India has become very sophisticated. India has built a very large market for real assets, and because India has always been a market which loves the touch and feel. So real assets through REITs, InvITs, pre-REIT, pre-InvIT, and some of these things. Then one of the other things that has picked up a lot is the credits ecosystem. India always had credit coming through the banking channel. Now the credit actually as alternative assets, as we are seeing globally, the credit as an asset class has become a very large asset class in India. And that is the other part that we see. And then there is, things like structured products and offshore. I'll also talk about the corridor that we are seeing. Now, if you look at the Indian diaspora, one is the Indian diaspora outside India, but the Indian businesses are also becoming very, very global. They have aspirations to have, 1 foot outside India, both in terms of their businesses, also in terms of diversification. Now, this is also a journey of each market, if you see. Now, typically, when you see, all markets in India, even though the market had become very sophisticated, all our investments are in a single asset class, which is the rupee. Now, as the market gets more and more sophisticated, people actually realize that they now need to move from one asset, single currency to multi-currency. And that multi-currency is something that, is again adding this diversification that is coming around. So Nuvama is actually looking to build this corridor. We've now have full-fledged licensed offices for wealth management both in Dubai and Singapore, and we are seeing the two markets as very, very different. Singapore is a very, very stable wealth management market with all the fully developed financial systems, very sophisticated. So a lot of the large family offices want the stability of Singapore to set up a family office there. And a lot of the regulations are also very friendly in terms of taxation, etc. Dubai, again, very close to India, both geographically, politically, and it is actually something that is very close to India now. And therefore, we are seeing a lot of traction in the IFC specifically, and people are looking to both for lifestyle plus looking to set up family offices there. So what we are trying to do as Nuvama is that we are building a corridor where Indians, when they are looking to set their family offices outside India, is specifically because Nuvama is a partner of choice in India, we want to continue their partner of choice outside India. The second is the ancillary benefit is that, both these geographies have a significant Indian diaspora. So people of Indian origins and non-resident Indians, they have never invested or they don't have a platform even today to have a full wealth management platform in terms of India access. And we being India specialists are saying that, we will offer you this full-fledged India platform. And I think that is something that is working for us. And we are seeing very good traction. And as we build this out, we are also hopeful that, we'll be able to offer this to the local population. But that is our, future plan. But currently, the way we see it, there is enough and more opportunity in building this corridor right now.
Now, look very quickly here. When you look at the framework itself, it's assumed at least that Dubai, Singapore, and even India are competing for wealth management, for family offices to be set up here. But this framework seems to suggest that it's more collaborative. What kind of solution is there, very quickly, that shows Indian wealth perhaps being serviced by both Singapore and Dubai and shows that there's more collaboration rather than competition?
So I'll tell you, I'll give you examples specific for both Dubai and Singapore. And India also has its own Gift City platform. So you rightly said that India has a Gift City platform, which allows access to, global markets. So that is where there is a slight bit of competition. But the fact is that a lot of Indian families already historically have had wealth outside India, and they also have economic interests outside India. They have exports to Southeast Asia, Middle East, Africa, Europe. Now, both these geographies become very, very useful jurisdictions to manage that cash flow and build that out. So Singapore specifically offers, I'll come to Singapore first. Singapore specifically offers two regulations under the family office structure, which is 13O and 13U, which are very, very friendly, which allows the Indian families to set up specific family offices entities. And then also there are the VCC structures. People find it very safe, and people are looking to actually diversify at least 20 to 25% of their wealth. So once they're set up in Singapore, then they're looking at global asset allocation, which is as much as US equities, global bonds, Singapore bonds, or Asian bonds, and that is where the structure is putting that in place. Similarly for Dubai, Dubai offers actually a single family office structure in DIFC, which is extremely friendly and tax friendly from an India point of view. And then Dubai also has structures which are linked to a foundation which people can set up to ring fence their assets. And again, in a single family office structure, once you're in a place like the IFC, you have access to the full global markets. So you have access to all the global products, global bonds, global private banks, and obviously the leverage that is available, including trading and structured notes. So what we are trying to say that once you're outside India through Nuvama, you actually have access to the full global platform, whether it is Singapore or Dubai. We as Nuvama are actually agnostic in terms of which geography people are looking to participate in. But the fact is that we are seeing attraction from India in both these geographies, because both historically have been close to India, have significant diaspora. So what also happens is that a lot of Indian families have their friends, relatives already there. Children are looking at foreign education. So people are also looking at real estate and housing, which is also becoming a big lever for people to invest specifically in Dubai. It also becomes a gateway for Europe for exports in Africa. So that's how the overall picture looks at for us.
Alok Saigal from Nuvama Private. Will have to leave it there, but fascinating to see this developing wealth corridor that you guys have coined that's developing between India, Singapore, and Dubai, and we'll see if this continues to develop in such exciting fashion. Appreciate your insights. That's Alok Saigal from Nuvama Private. We'll be back in just about 2 minutes, but we'll cover more with regards to the Indonesian markets and also counting down to the Indian market open in about 25 minutes. You're watching Inside India. Don't go away.